Okay, so BitNest. I mean, you can't really miss it, can you? It feels like this platform just exploded this year.
Absolutely exploded. It's everywhere.
Yeah, every corner of the crypto space seems to be buzzing, and not just, general buzz, but talk of these, well, frankly, crazy returns. It's just this massive wave of hype.
Right, and that kind of sudden, huge excitement, that's our signal, really, to pause and take a proper look. We need to dig into the sources you found.
Hmm.
Is all this excitement for BitNest actually based on something solid? Or are we looking at another one of those situations where the claims just sound, well, a bit too good to be true?
Exactly. So our mission today is really to cut through that noise. We want to sort of pull apart the specific things being claimed, the stuff you see in forums, and weigh that against the concrete risks that the source material points out. Let's start with the appeal, because honestly, it's strong. BitNest promises passive income, right? They call it loops investment cycles.
Loops investment cycles, yeah.
And the source explains these are basically like super aggressive short-term deposit things designed to cycle your capital incredibly fast.
They've definitely nailed the fast part. I mean, the specific hook, the number everyone's quoting, is getting payouts of up to 24%.
Yeah, 24%.
In just 28 days. I mean, that's a ridiculously short cycle. That kind of quick fixed return is practically designed to go viral.
And apparently it's working, at least based on the stories out there. The sources mention users claiming they're getting instant payouts.
Straight to MetaMask, they say.
Straight to MetaMask, yeah, supposedly no hassle.
Yeah.
And that immediate reward, that feeling of, oh, it works,
Yeah.
that makes it feel legit, doesn't it?
It really does. And that's often the most dangerous part, that smooth, immediate gratification. So, okay, let's pull back the curtain. Where does the source material see the big problems, the sort of structural issues?
Right.
Well, the first massive red flag is just complete anonymity and, like, zero oversight. The team behind BitNest, totally unknown. The platform itself apparently just refuses point blank to reveal its team.
Now, okay, in DeFi, we know some big projects started out pseudo-anonymous, right? But the sources here seem to suggest this is maybe darker than just decentralization vibes.
Yeah, it seems that way. Because this platform is running on multiple domains, which is already a bit weird. And crucially, it seems to have documented links to a specific project that failed last year. Remember on Unisloop?
Oh, on Unisloop, yeah, I remember that. So there's a connection.
Seems so. And that detail, it just changes the whole risk picture, doesn't it? This isn't just some unknown new thing. It might be a known quantity, maybe just rebranding after, well, failing before.
Right. And if you're starting over, but you already have that history, that lack of accountability is suddenly a huge issue.
Exactly. It's not a clean slate.
And then you look at the core financial promise, that 24% return. I mean, the alarm bells just get louder, don't they?
They really do. You have to talk about that fixed return. When you see guaranteed numbers like that, 24% in 28 days, regardless of whether Bitcoin is up or down or sideways,
Yeah.
the basic math just doesn't work.
It feels off.
It feels very off. The source explicitly warns this whole thing has classic Ponzi vibes. I mean, think about it. In a market as volatile as crypto, how can any real investment mechanism guarantee high fixed returns like that? Unless the money isn't coming from actual market gains. Unless it's coming from, new investors' money paying out the earlier ones.
Right, the definition of a Ponzi. And that connects directly to the whole consumer protection angle, which is why this matters so much to you, the listener. BitNest isn't registered. It's not licensed anywhere.
Nowhere. Not with the SEC in the U.S., not the FCA in the
Yes.
UK, just nowhere.
And the implication there is pretty stark.
Oh, it's severe. If this thing collapses, or if the anonymous devs just decide to, pull the rug.
Which happens.
Which absolutely happens. The source basically says, good luck getting your money back.
Yeah.
There's just no consumer protection, no legal path for anyone who puts money in.
So, okay, we're left with this real tension, aren't we? On one side, you have these reports, these anecdotes of high rewards, instant payouts.
The viral hype.
Yeah. And on the other side, you've got these really serious structural problems.
Yeah.
The anonymous team, no regulation at all, and these quite worrying links back to Unisloop.
Mm-hmm. So the final takeaway, especially if you're trying to learn and navigate this space safely, is to really internalize what the sources are saying here. There's simply no such thing as guaranteed returns in crypto. It just doesn't exist.
Right.
If a platform is promising you guaranteed fixed results, especially high ones, you just have to understand the massive, almost overwhelming risk that likely comes with that promise.
The risks are clear, definitely. But the fact it got so popular so fast, that brings up something else, doesn't it? Kind of a bigger question.
Yeah, what I thinking?
Well, what does it actually say about the crypto environment right now? That a platform with a totally unknown team and apparently documented ties to a previous failure can still create this much immediate viral hype, that level of excitement.
That's actually a really interesting point. What allows it to happen so easily?
Exactly. Something maybe worth thinking about long after we finish this deep dive.